Welcome, everybody. We will start slowly. Good afternoon or good day for others for whom it's morning. Traditionally, we will present in the same format the results of ASE and Payton for 22. Short summary in the beginning. The quarter was good, as you've seen, 18% growth of EBIT driven by all segments, all business units, but very strong in dedicated solutions and payment segment. In dedicated solution, we see a very big impact of intelligent transport systems, so monitoring systems for highways, tunnels, and smart city solutions, as well as BPM solutions. This has been the major driver. A good driver in Payton in all business lines, but something that has very much shifted or lifted the revenues was POS deliveries and ATM deliveries with maintenance or within outsourcing contracts that we had. So this has had a positive impact over the year, especially revenues. In Turkey, what we are always describing, because of very high inflation, we have a fading effect of the results. The business which is done in Turkish lira is indexed on an annual basis in the beginning of the year, usually with inflation index or with a blend of PPI and CPI, and this has a very positive boost in the beginning of the year, and as the inflation grows, the effect on the foreign currency fades away. So this you can see on smaller growth in euros in the Q4. And in banking, it is overall a pretty good year, but we had a very high base based on the license revenues in 21. So that's why maybe the dynamics are not so good, but it was very much improved thanks to big projects and implementations we were realizing. Now, in terms of biggest deals, you'll have a list of many deals that happened over Q4 or started. I will try to summarize some of them. We had a couple of core banking implementations, which we continue also in 23, mostly in Serbia, some Bosnia, and Macedonia. But this has been realized on these markets. Additionally, we focus very much on the result of these core bankings were mostly consolidation projects, so M&A done between the banks themselves. And the good news is we are rather not losing the market share, but either consolidating two banks that were our customers, or the banks decide to stay on our solution. Another area or dimension where we see in banking a very big growth is channel solutions, both mobile and internet, but also digital origination, so digital lending. So the banks are very much interested to move to digital channels with active sales offering. And here we see huge interest. We are winning projects, local and also international projects, and our ambition is to go even beyond with this solution to other markets. As for dedicated solutions, a lot of BPM projects, both for public segment as well as for financial sector. Majority of them happening on free markets, Romania, Serbia, and Croatia. And, we expect this to continue in the future. Let's move on for the next one. And also in banking, we have security solutions, which are for the financial segment. These are mobile tokens or PKI solutions, or application protection, app protector solution, and anti-fraud solutions. As for anti-fraud, we signed a nice deal with a Canadian bank, but the good news is that we see quite a big interest for this anti-fraud solution. We are competing with big international companies. And obviously, cost-wise, value for money, we are competitive, but now we are managing to penetrate even more the Turkish market with big institutions, big banks, and we believe this will be highly contributing to our results in 23. To continue dedicated, couple of live solutions, which is a collaboration tool, contact center / ticketing / CRM. So this is developing mostly in the Balkan area, but we are searching for customers in other areas. And one third-party solution, which is very much, we usually don't mention third-party, but this is a SaaS solution from a global US vendor, Dynatrace, for monitoring application performance. And this is developing very nicely on the Turkish market and is contributing pretty nicely to our results. For the payment, as mentioned, ATM POS, a lot of deals, a lot of orders, for classical, for recyclers, for Android devices, all with own software and all with services and maintenance or within outsourcing contracts. This is throughout the region from Spain, a very high contributor to the Balkan area. In e-commerce, we see a nice dynamics and pretty good performance. Actually, I would say very good performance of the license e-money entity called Paratika in Turkey, which sells payment products directly to merchants. And here we see we are approaching break even, having big losses in the past. So we are very happy with this. And what else we can say in Payton? In Payton, we see single pause market development. We've managed to penetrate Croatian market, pretty strong in Bosnia, entering Serbia, but now we are focusing on Romania, which is a big market for us. And it looks we have a pipeline of contracts already being signed, and we hope to get a foothold on the Romanian market, which will contribute in the future years very much to our results. Czech Republic, much better than historically. 22 was better than 21, but we have signed also recently a contract for a global vendor to service 1,400 units of theirs in Austria, so moving to another geography. And we think this cooperation is pretty prospective, so we hope this to grow, and this will also positively contribute to our results. And I would say these are the major deals that are worth mentioning, or brands. And now let's move to the results. Michał, please.
Sure. So let us start with Q4. To recall how to read this slide, first column are figures as they are reported in financial statement, and the second column is for figures adjusted by hyperinflation accounting, so IAS 29 bookings, and then we have previous year, so comparative data. Differences in both cases are calculated versus adjusted figures, so excluding hyperinflation, and most of comments which we will give you are for also those adjusted figures. So on top line increased by 36%. Most of this, more than 1/3, sorry, a smaller part was generated around 1/3 by own activities, most by resale of equipment and third-party solutions. But if you look on margin one, so revenues less external COGS, so value of equipment which was sold, those percentages they change significantly. Almost 80% is generated by sale of own services and own software. On level of EBIT, operating profit increased year-over-year by 18% in euro, and if we look figures in Polish zloty, it is 20%, and this is due to change of parity between euro and Polish zloty. On EBITDA level, dynamics are slightly lower, but changes in absolute numbers, they are higher. EBITDA grows around 600K more than EBIT, and this is related mostly with depreciation of assets which were recognized as part of purchase price allocation process for new acquired entities. Below EBIT, In financial activity, in Q4 we have negative effect of lower result on FX rates, FX gains. In last year, in 21, during Q4, there was huge devaluation of Turkish lira, and this affected us positively as assets, US dollar assets, which we have in our balance sheet, were recalculated, and positive gains were generated. In 22, this didn't happen, at least not in Q4. It was earlier in Q2. On top of this, in financial activity, we have effect of around 900K of cost resulting from dividend for minority shareholders of one of Bosnian subsidiaries. BSTS. It is consolidated using a method of present ownership, and in this method, dividends for minorities lands in group P&L. On top of this, we have effect of revaluation of put liabilities and contingent liabilities resulting with related to acquired entities. When talking about tax, in absolute number, the tax decreased by around 400K year-over-year, with slight increase of effective tax rate by around half a percent. In non-IFRS figures, those which we present in two bottom lines, we exclude elements which are purely accounting effects of applying IFRS, like depreciation of assets recognized during purchase price allocation. Mostly in our case, this is software which we recognize, and also effect of revaluation of put options and contingent liabilities related to earnouts, and mentioned dividend to non-controlling interest. Let's move to result by business units. Let's start with payment. Here we have growth of revenues by more than 15 million, and this growth was realized by all our business lines. Starting from the top, in e-commerce, growth by 700K. Half of this growth is in Turkey. On transaction revenue stream, it was even higher, but it was partially compensated by drop of, maybe not drop, but a higher implementation revenues last year, where we closed one of big project. On top of Turkey, we have growth in other locations, in Croatia, Bosnia, and Serbia. For processing, traditionally, most of the growth is in Serbia, where we have competence center for processing, but part of this revenue is related with services sold to clients in Bosnia and Montenegro. For more traditional business lines, so ATM and POS, both, as I mentioned, they have growing revenues. In ATMs, 4.4 million. This is mostly Romania and ATM, thanks to big deliveries of ATMs, recycler type of ATMs with related services of installation. And in POS, a big part of this growth is in Western Europe, in Spain, where we have a continuation of Android POS deliveries to clients. And this is followed by increase of independent networks, so independent POS network and electronic cash registers in Croatia mostly. Coming back to result, this 15 million euro growth of revenues resulted in growth of EBIT by 1.2 million. With a decline of profitability, but this profitability ratio is somehow affected by those by this huge increase of revenues resulting from equipment deliveries. It's kind of diluted. And for the part which we call ASE, so banking and dedicated solutions. In banking, we have a growth of revenues by almost 3 million euro. And this growth is in all business lines. But what is important to mention is that in previous year, we had in base quite big deliveries of licenses, mostly in channels, for channel solutions. So on license revenues, they dropped by around 1 million euro year over year. As you see, it was compensated by services as total revenues grow, but of course, services are not at 100% profitability as licenses. So we covered on revenues, but on operating profit level, there is a decline year over year. This is reflected in profitability ratio. Anyway, this level of 22% is something satisfactory for us. For dedicated solutions, here we have over 9 million euro growth of revenues, and reasons are similar as for previous quarters. So intelligent traffic solutions and BPM solutions. These are the most important two components. On top of this, growth in infrastructure-related services, deliveries and services in Serbia, Romania, and Turkey. On EBIT level, in dedicated solution, we generated 1.4 million euro growth, so significant year over year, with slight increase of profitability. And let's move to result by geographies. So here we have three geographies with highest growth. First is Iberia, so Western Europe, here growth by 1.3 million euro on operating profit. And this is what I mentioned about POS deliveries, Android POS, and related services and software which we have on those devices, because they are loaded with our software. Then in Serbia, 1.1 million euro growth. This is mix of a few lines. Big part of growth is dedicated solutions, where we have growth in BPM and live. Also in payment part, so payment growth in processing, which I mentioned on revenue slide, and in ATM. Slightly slower banking with slight drop of result. And a third of those biggest geographies regarding growth of EBIT is Bosnia, and here we have intelligent traffic solutions plus some billing and CRM solutions, both of them presented in dedicated solutions. So this about biggest growth. Smaller growth we have in Central Europe. This is the effect of Poland and Czech Republic, where we have payment business. And for drops, here what is visible is Croatia. And there are two reasons. One is banking, where we have very high base effect. Licenses delivered in 2021, and a slowdown in dedicated solutions in area of BPM. So this was about results by countries, geographies, and moving to full year figures. As you see, picture is very similar, not only shape of table, but also numbers. More than 30% revenue increase, EBIT 16, and higher growth in Polish zloty. On EBITDA level, Again, lower dynamics, but higher absolute growth, and the same reason, so PPAs and depreciation resulting from them. On top of this, some investments in payment infrastructure, mostly in independent networks, so IPD, independent post deployment, and in electronic cash registers. Below EBIT, net profit, in net profit, we have also the same three effects. Effect of foreign exchange gains from revaluations mostly. We have also drop year-over-year, but significantly smaller than looking at Q4 figures only, as in Q2 2022 we have had positive effects. Dividend for non-controlling interest, which I mentioned, an effect of revaluation of contingent liabilities and put options for minority shareholders. When talking about income tax, here we have increase of tax cost by 700K, but with effective tax rate drop by around 2 percentage points versus 2021. Talking about full reported figures. Why we have this drop? Because the hyperinflation bookings, they are in big extent not taxable, so they generate profit before tax, but without tax effect. Let's move to business units. Again, very similar picture. Biggest growth of revenues, 45 million euro in payment line. And here again we have situation that all business line show growth. Biggest growth we have in POS line, 25 million euro, and biggest part of this growth is in Iberia, Western Europe, related with what I mentioned for Q4, deliveries of ITMs, installation services, software, and later maintenance of those devices. It is followed by also quite big increase in Serbia, where we delivered big quantity of POSs as well. Again, Android POSs. And we have also on full year numbers effect of independent networks, so IPD and electronic cash registers. In ATMs, on top of mentions for Q4 deliveries in Romania, Macedonia, we had also deliveries in Serbia and Croatia, and some additional services related to preparation of networks for Euro, which was implemented in Croatia starting 2023. Processing, it's simply annualization of effect we discussed for Q4, and in e-commerce, again, around half of this growth is Turkey, where we have significant growth in transactions, which were processed by our payment gateway, and in Romania we have growth in area of web shops, mobile shops. On top of this, payment gateway in Croatia, which is sold directly to merchants, and all this delivered EBIT growth by more than 4 million euro year-over-year, with slight decrease of profitability as previously due to high deliveries which took place. Banking, very similar effect to Q4. Again, growth of revenues, 7 million euro more, but with a significant change in structure of revenues. License revenues, unlicensed revenues, they dropped by around 3 million euro year-over-year, what has visible impact on profitability and resulted in slight decline of result. For dedicated solutions, growth by almost 30 million euro, and again, mostly intelligent traffic solutions and BPM solutions, but also good year in advanced infrastructure, so delivery of equipment, software, and related services. All this resulted in increase of result in dedicated solutions by more than 2 million euro with similar profitability year over year. And let's have a look at geographies. So again, very similar picture. Huge growth in Bosnia, 3.5 million euro. Intelligent traffic solutions, CRMs, billing, but also good year for banking and payment, so traditional payment, ATMs and POSs. In Western Europe, growth is in payment, so delivers, which we discussed, and related services, also some license revenues for software. Good year for Serbia with increase of result by 900K. And from other increases is Central Europe, again Poland and Czechia, and in this line other, where we have growth by over 1 million euro. Here are two elements. One is in Albania, independent ATM network MoneyGet. It was performing very well, and we have significant growth of result by 500,000, and also in Slovenia and Kosovo on more traditional ATM and POS business. To comment drops in Croatia, 2 million euro lower result, but we had a very high base. So a lot of licenses which we mentioned for banking were delivered in Croatia, and slower, weaker year in dedicated solutions in area of life and BPM. And second country with drop is Turkey. We have here 600K less, but we had a huge base in last year as well related with services. Most of e-commerce business is rather recurring transactional, but last year we had one-off project which was delivered to one of our clients. This is about P&L and short look at balance sheet and cash position. So cash and short-term investments as at the end of 22 is 13 million euro higher than end of previous year. Lease liabilities slight decline due to regular payments and where we are in our lease contracts. Increase of debt, bank loans by around 6 million euro. More or less half of this is financing of working capital and open projects in few geographies like Bosnia, Serbia. And slightly less than half is more related with financing long-term projects and investment in infrastructure for outsourcing in payment in Serbia and Portugal. For deferred payments and contingent payments for acquisitions, this growth is mostly related with revaluation of put option for minority shareholders of Necom Plus. As you noticed on previous slides, Western Europe, as well, very good results, and this is where Necom Plus operates. So this is somehow linked with those huge growth of result. Below net cash, working capital, mostly changes related with scale of operations and big deliveries which took place at the end of year, mostly in payment, where we have POS, ATMs, deliveries. They were realized, invoiced, but not yet paid by our clients. But also we haven't paid to our vendors for equipment. Inventory growth mostly related to inventory for projects, so equipment which we bought and we are planning to deliver to clients on specific projects during Q1 this year. Mostly this is related with payments. I would say like 2/3 is payments, so ATM, POSs, and some part also for advanced infrastructure in dedicated solutions. And looking at cash flow, so operating cash flow similar as last year, a slightly lower conversion due to investments in working capital, which I described a moment ago. Looking at other lines, pretty similar figures, lower expenditures on M&As. We have payment for earnout for Bosnian entity, BS Telecom, and two smaller acquisitions realized by companies in Romania and Kosovo. And this resulted to 8.5 million euro. Okay, and this will be for results. Let's look at 23 outlook.
Okay, good. Traditionally, at the end, we show the backlog coverage. This is for the whole group. You see on the left-hand side for Q1 and on the right-hand side for the whole year. This backlog coverage is good. It's comparing the numbers at the same period of time, roughly in February, second half of February, to what the backlog has been in the same period of time, 22 in February. And the comment here you see separately for banking and dedicated solutions, where Q1 a bit better, whole year a bit lower, whereas it's opposite for Payton, Q1 a bit lower, better for the whole year. But overall, the comment on the outlook is positive. These backlog coverages for the group are giving us confidence that we can continue growth as a group. And that's our major focus. This would refer to all business lines, Payton, banking, and dedicated solutions, where we don't see major dangers. Speaking of dangers, the major focus now is macroeconomics, to what extent we can see slowdown that will impact investment decisions of our customers. So far, we do not see a major slowdown or restrictions in that area. The biggest question mark is for Turkey. Just returned from there. Yesterday, I must say, the market is very heated in terms of internal money flows, supply, a lot of investment. Our pipeline looks quite positive for Turkey, surprisingly. And my personal commitment, there is a lot of question marks because Turkish lira is strengthening enormously versus foreign currencies, taking the inflation. Prices on the market become quite expensive of everything, even compared to other Central European countries, not speaking about Western European countries to a certain extent. So there is a definite imbalance. Obviously, the horrible earthquake is not positively contributing to the whole picture. And we have elections now currently planned for May. This can be postponed, but Turkey is a big question mark, how the macro will behave there. And will the balloon blow up spectacularly, or this will be a gradual thing? So far, we see we are pretty reasonably prepared for that. And the outlook for this market is quite good, but let's see what the time will bring. As for other markets, pretty stable, big pipeline, and we feel quite confident. We get decisions about M&A acquisitions, and I can traditionally answer to that it's very difficult to predict. We have closed almost, but it has not closed because we are waiting one acquisition for an approval of the regulatory body. And we are waiting for this approval quite a long time, getting consecutive questions and repeating them. And we don't know how much time it can take. But no promises here, taking how much time it has taken so far. We have some ad hoc opportunities which might be interesting and positive, but again, until the last moment, until the deal is finally signed and closed, we cannot make any commitments. But we do work on a group level, local level, on different topics all the time, and they might pop up, but the range of acquisitions probably will be something between what happened in 22 and 21. 21 being the biggest size and 22 being the lower end. And it depends on many things also that we cannot personally impact. And having said that, and looking pretty positively, I'm open to your questions. You can chat, you can ask, use voice, raise hand, whatever. Please let us know what you would like us to clarify. We are more than happy to do that. You wait a second. Please feel free. If you have technical issues, raise the hand just or on chat or spoken. And okay, waiting a bit maybe for question or something. I will mention some of the topics that were raised during the Polish version of the conference. One was on dividend, which has been announced. The question is that we have a growing cash surplus and that maybe we could pay a bigger dividend payout. The answer to that is yes, we could. But having said what I said about M&A, and we do expect over next, not year, but years, more unpredictable environment, which will provide short-term opportunities for acquisitions. And raising financing will not be so easy, and it will be also less predictable. So we do want to be ready for these opportunities ourselves, and we see them popping up in the currently, and we have some discussions. We decline some, but in some we participate, and these are pretty ad hoc topics. That was one question, and one comment also from my side is that looking at the outlook for 23, the pretty good news is that we are relying on a stable management team, and I'm not talking about top management, I'm talking about a team of probably more than 30, 40 managers who are more entrepreneurial, understand the P&L, so the dependency of the whole group of operations on one or two persons, and this risk has dramatically declined. And it is becoming a quite diversified, both in terms of geography, business lines, but also people and management group. So that gives us faith that different initiatives that we are raising come up more and more from different places, and we are expanding on geographies where we operate, but also actively looking at places like Egypt, Italy, Latin America for growth opportunities. And step by step, this is coming. So pretty happy with that. On the payment side, we are very much, I mentioned banking, we are looking at the channel and digital solutions, which we want to go international. On payment, we are looking at the merchant business, slowly expanding into acquiring or semi-acquiring with e-money licenses, and also exploring slowly buy now, pay later opportunities, not as a financing entity, but as an intermediating entity, giving our customers opportunity to choose different financial institution products. And roughly this would be it, what we are planning to do and grow. Also with the intelligent transport systems, we are looking at new markets, and we do hope to develop Romania in that extent. So if there is no more questions, we have a hand raise. Please just.
Hello.
Yes,
this is Peter Brisan from Avaron Asset Management. I'm sorry, I'm very new to the company, so maybe my question is very basic, but maybe just for my background, I noticed that you have actually pretty decent licenses business or kind of products business where you sell licenses. Can you just give a bit more color? How is the proportion of licenses versus consulting revenues in those products businesses, and how has it developed over time? Is it so that you manage to penetrate the clients with your products over time, so the kind of share of licenses is growing in time, and then kind of you do not need to grow the team in the same proportion, or it's rather this way that you kind of need to have actually growing number of people as well in order to grow the licenses part, just to understand how this these two interconnect with each other.
Sure. Well, basically, when we speak about license, I would say more intellectual property or this type of business, because we are moving to SaaS or some subscription services where you don't see this in license revenue, but in some repetitive service revenue. And overall, in our strategy, we want to concentrate on that, except so for some business lines, but I will mention this. So for banking, this is very much the case. And we are trying to grow this element of our business. And we see this growing over last, especially couple of years, 3-4 years. For dedicated solutions, many years ago, like 10-12 years ago, there was much more dependency on infrastructure related services. Now we have managed to transform this more to software operations and adding different software solutions and focusing on this, but this is way behind banking in that extent. And in payment is a service business. So this is like usually either from less value added like POS, ATM, which is equipment and network servicing or outsourcing of the total networks for acquirers on their behalf. And we have a big e-commerce part, which is much more active, which is software based, but also sold as a service to our customers, or processing also sold as a service, where it's transactional type of business. Yes. So overall, in our group, I would say we are calculating internally all the transactional, recurring, outsourcing type of business, and we have such an internal KPI, and this is oscillating around 60+% from our revenues. Yes. On a group level, but this is not pure license. This is recurring revenue, repetitive revenue in SaaS, in transactional business, which is based on some long-term contracts or commitments from the customers. And in terms of share of pure license type of related IP revenue, banking is the highest, and dedicated solutions the second, and as I mentioned, patent by its nature a bit lower. I don't know if it helps a little or not.
Yeah, thank you. That's very helpful. And SaaS revenues, of course, are even more valued. Just one more clarification in terms of these dedicated services or solutions. Do I understand correctly that this is very much kind of tailor-made project-based approach? So kind of the clients might be the same, but you do different project every time to them, or?
It includes, actually, the origin of this business line is we gathered everything that did not fit, to be honest, banking nor payment, which are cleaner units in terms of their profiles. But in dedicated solutions, the dominating part, I would say, is now intelligent transport systems. So this is a software base, but including some integration for tunnels, highways, traffic management, and smart city solutions. Then the second one I would say is BPM, business process management, based on our own solution internally, and a collaboration tool like CRM/contact center/ticketing system called Live. These are the biggest three solutions which are not directly related to each other, but you're right, we do have in this business line custom solutions, tailor-made solutions, which we do for our customers. Majority of these tailor-made is for public administration, but not only. And also still we have some infrastructure business with, of course, focus on services that is in these dedicated solutions.
All right, thank you very much.
Any more questions, guys? Feel free, just shoot. Anything unclear on outlook, on perspectives, on business lines, or backlog? If not, thank you very much for participation. We really welcome you to contact us directly. We will be holding this conference in the future a bit earlier, not during the day, but we will not be waiting for the publication of the financial results, because most of the data, actually all of the data we present and we speak about, we have available before the official audit, yes, by the auditors. So we want to provide the investors with a quicker update after the balance sheet date, and you can expect such invitations sooner after the end of quarter or end of half a year and a year deadlines. Thank you very much for participation, and we look forward to more contact with you. Thank you.
Thank you.